If you earn tips and you're getting ready to file your tax return, this video is for you because you've probably heard the headline, no tax on tips. And people think that means, well, my tips aren't taxable anymore. But that's not what this law does. And now the IRS has released official guidance explaining how this is going to work for tax year 2025. And it's way more important than most people realize, because here's the problem. If you file your taxes and you don't have your tip documentation together, you could miss a deduction that's worth thousands of dollars. So in this video, I'm breaking down what the IRS has clarified, what changes for 25, what you should be tracking right now for 26, and what not to do when you file. So let's get into it. Okay, quick recap. If you've seen some of my other videos, we've covered that, but let's do it again. Number one, tips are not tax-free income. You still pay FICA taxes on tips. Think that's your Social Security and your Medicare. It doesn't erase that. Number two, this is an above-the-line deduction. That means it reduces your taxable income even if you take standard deduction, and that's good news. Number three, it's up to $25,000 of qualified tips that you can deduct each year. Once again, great news. However, not everyone qualifies. The IRS Treasury is going to publish a list. They already have a proposed list, and I got a link down below that you can take a look at. You're going to want to verify that to make sure your tipped occupations qualify. And once again, we've done a video on that earlier. You can take a look at it, going over what that had to say. But there's a link down below. Income limits do apply. That means this deduction phases out when your income gets too high. Now that means if you're single, 150,000, or 300 married filing jointly. This is the big one. You must report your tips. If you don't report your tips properly, then you don't get the deduction. And that means you have to report your tips. Now that's the foundation, but let's go ahead and talk about the IRS guidance and what it means for this coming filing season. Okay, this one kind of stinks for you. The W-2 is not getting updated for this year, for 25. The law said employers would have to report things like cash tips separately, occupation codes, qualified tips total, but the IRS gave a transition period and basically said, you know what? We're not going to require that until 26. That means for your W-2 for 25, this may not be as easy. It probably won't. Your employer's probably not going to give you the information. And so that means for this upcoming season in 26, you're going to have to be responsible for proving your qualified tips. Next year on our 26 tax return, probably be a different story. But for now, it's going to be on you. Okay, but some good news. The IRS gives us multiple ways to calculate our tips because it's not on the W-2. So they've outlined some things we can do. We can rely on Box 7. That's that Social Security tips on your W-2. We can use our monthly tip reports. Think our Form 4070s. We can also use other payroll documentation your employer provides. And so that means, look, if you've got good records, you can still claim the deduction. But if your records are a mess, you're going to have a problem. And what does that mean? That means right now, go back and clean up your records. Get in there, ask your employer for things that they can do. This is a big deduction. I don't want to see you waste it, but you need to have records. Now, another one that came out is they paused the SSTB disqualification. What does that mean? That means if you worked for certain employers called specified service trade businesses that you didn't qualify. Think things like beauty, that's a big one, consulting, financial services, accounting firms, performing arts, athletics, personal services. Basically, tons of industries where people actually earn tips. However, the IRS said in the Notice 2025-69 that they're going to give transition relief that basically suspends that limitation and allows us to do it. We just need to look at that list of proposed jobs that I said I'm going to drop below. Make sure you take a look at that. So what does that mean in normal English? That means for now, if you're in a qualified tipped occupation, you're generally treated as eligible without getting blocked by this rule for 2025, and that's a big difference. For 2026, stay tuned. We'll see how that unfolds, but I'll keep you up to date. Now, number 4, contractors and gig workers, you also qualify, but the proof is totally on you. If you're a gig worker, you're not getting a clean tips number or 4070 reports or anything on a W-2 or payroll reports. So this is going to be on you. There's no place on the 1099 NEC. It's going to come down to you tracking your payout summaries or some kind of documentation to prove that you had the tip. So if you're a DoorDash driver, an Uber driver, you need to start keeping things like your app-generated tip summaries, your daily logs, your receipts, payout reports. You're gonna have to be able to do this without guessing. If we're just guessing and you get audited, you're gonna lose the deduction. So right now, you're gonna want to get that done. So that means documentation is key this year, and it will be for every year as far as that goes. So what does this mean for now? If you're about to file your return, you need to make sure you understand this deduction for 25. This is going to be done right now in our tax return for last year. If you don't have tip reports, you don't get the deduction, so you need to make sure you document. If you're getting cash tips and not reporting them, well, now we're risking penalties, and you're also disqualifying yourself from the deduction, and the IRS is pretty clear on that. So don't mess around with not reporting tips. We also need to be careful with relying on box 7. Just because it's on your W-2 doesn't mean it's perfect. So you're going to want your own reports. We want to make sure that we don't underreport this and we get the biggest advantage you can. Now, if your income is so high that you're above the threshold, then box 7 may not even reflect anything. So once again, make sure you check your records because your employers, this is new for them too, and they could have missed things. So go through your pay stubs, go through your records, go through your tip reports. Do that before you sit down to get your taxes prepared. It's going to save you a lot of time in the end, and it could save you a ton of money. And I told you that list is down below. Once again, this is super important, so I'll keep bringing it up. You need to make sure you're on the job occupation list. And if you're on that proposed list, and you customarily and regularly receive tips before 12/31/24, and this is key, got to be careful here. Some people are going to try to change things that were normal pay and now pretend it was tips. No, it said your job normally, customarily, and regularly received tips before 25. So we can't change this after the fact. That could cause us to get disqualified. And don't let somebody tell you everybody qualifies, because that's just simply not true. We need to confirm our occupation qualifies. And for 26, we're really going to want to watch for that new list to come out. We're going to have to see what the IRS does with those SSTBs and find out if you qualify for next year. So this thing's not over yet, so you're going to need to stay dialed in. Go ahead and hit subscribe, like. I'll keep you up to date, so when that new list comes out, you're not going to have to worry about it. We'll go through that list, and I'll make sure you're covered. But go ahead and subscribe, and I'll keep you up to date. Now, what are some of the biggest mistakes? Well, mistake number 1, my tips are tax-free. No, you're still paying FICA. Mistake number 2, not keeping records. No records, no proof, no deduction. IRS is very clear on that. Mistake number 3, assuming your employer will handle it. Employers don't have to do that until next year, and even then, this is new. You're going to want to make sure you keep up with it yourself. Mistake number 4 is gig workers don't have to track tips separately. If you can't separate your earnings from your tips, then that deduction could get challenged or eliminated. You have to be able to track it separately. So what should you be doing now? Well, if you earn tips, here's your checklist. You need to track your tips daily. I know it sucks, but this is a big deduction, so do it. We need to save our monthly tip reports. We need to make sure we pay attention to that IRS occupation list. I'm going to help you with that one. I can't do your tips daily, but I can watch that list for you, so stay tuned. You're going to need to keep your year-end pay stubs and tip summaries. And if you're a contractor, a gig worker, you're going to have to save everything and make sure we document the differences. And next, we're going to need to prepare for 2026. The employer reportings is going to change. There's going to be new guidance, so you're going to want to stay on top of this. So here's the bottom line. The IRS guidance, it has made the deduction clear, and it's made one thing obvious. This tax break only helps the people who can prove it. So start tracking now. Just like so many things, document, document, document. We've got to stay organized, and so when 2025 filing season hits, which it has, you'll be ready, and you'll also begin to be ready for next year in 2026. So once again, hope that's helpful. Like, subscribe, and we'll see you in the next one.